Hello. Yes, good afternoon, everybody. I hope you can hear my voice clearly and also see my screen. Today's webinar is this is my favorite way of trading. I'm that person who likes trading dynamic levels, the support levels or resistance levels that are dynamic in nature. So that means that there are two types of support levels. We do have horizontal support levels. We do have dynamic support levels. At the same time, we have horizontal resistance levels. So at the same time, we have uh, dynamic resistance levels. So the word dynamic could also mean diagonal. Diagonal. So in our case, basically, we want to look at those levels that considered as support or resistance in nature, but they are diagonal in nature. So support and resistance levels that are diagonal in nature or that are dynamic in nature. So we'll start off with the resistance trend lines. So a trend line is basically just a line which shows you where the trend is headed. Like if we have something like this, assuming this like an empty screen, we have something like this, a plain screen, and then we do have a line which moves like this, then the price keeps going out of it, up from it. We have something like this. This is price. Whatever I'm drawing now is going to be price. This green line is price. The price keep coming up, then going back and touching it, but does not break beyond it. It continues up. The same thing happening. It does not break below it. Instead, it continues up like this. It continues up and then it comes down like this. So this is a very good example of a horizontal, diagonal support trend line. What it means is you can see that each time the price touches the lower line, it bounces off from it to the upper side. It bounces off from that point. It bounced off from that point, and then it bounced off even at this point here. So how do you trade a level like this? Do you wait and sell when the price is here, or do you wait and sell when the price is here, or do you wait and buy from the bottom, or buy from the bottom, or buy from the bottom, or do you wait for price to break below the whole thing? What are you waiting for you to enter trade? Okay, this is how I look at it. There are two best ways that I normally do trade trend lines. One is buying when the price touches this level, especially the third time. Another one is when the price breaks below the same trend line and then it sustains itself below it. What I mean by sustaining itself is if the price keeps struggling, that is, you see price moving up, it keeps consolidating somewhere above it, below it, it keeps doing something like this. This is a sign that we are actually struggling below that level and we are not likely to see price break beyond it. This is struggling. This is struggling. So we'll wait for price here. The first time the price touches this level, we don't know this as support. It doesn't look really cute. We can't buy there. The next time the price touches, we are not sure. So when you see 1, 2, you draw a line which is touching the first one and the second one, and then extrapolate it. That is, draw it indefinitely to the future, so that when the price touches it, naturally you buy. So if the price now goes up and then comes back to this point you're supposed to buy, if the price goes up, comes to this point you're supposed to buy, if the price would have continued up and came back, you could have bought it. So now, how do you know that the price is not going to break below this level so that you can pick a buy position? The best way is to look for candles, the way candles are forming around that level. So like if you have price coming to that point, and then the next thing you see is you see exhaustion candles. You see price attempt to break below that level, but then it ends up coming back above it. It attempts to break below it, and then it ends up coming again above it. Those are signs of exhaustion. Or if you see maybe you see a pin bar candle, you see maybe an engulfing candle, or you see in the decision candles, or you see maybe inside bar candle. Those are some of the signs that tells you that you are likely not to see price break below this trend line. So your job will be very simple. Watch for price around that level. watch for price around that trend line. Look for buy positions, look for buy positions, look for buy positions. As long as you are seeing pin back candles, that is, you're not seeing just any pin bar, you're seeing bullish pin back candles. When you're seeing bullish engulfing candles, when you're seeing bullish inside back candles, and when you're seeing indecision candles. So what I mean by indecision is basically just doji candles. Doji means we are not decided. So when the price gets to that level and then you see that we are not decided, then chances are we're likely to see a reversal from this point. So that is one simple way that I do trade trend lines. The other way, like that is one simple way I do trade supportive trend line. The other way is this. I'll wait for price to break below this point. Then I'll now look for area of consolidation, that's area of struggling. Like in this case, I'll draw all this. I'll pick the high after this breakout, the high which we've seen so far. I'll pick the low also, then draw a line like this, and then also draw a line. So that means I'm picking some range, then I wait for price to break below the entire range. So after a break below 1.22164, that will give us now the correct place to sell from, which means we'll enter sell position, hold on to that position until when the price is here. So if you sell it successfully after the break from this trend line, the best place normally to take profit is when the price was touching the upper trend line, the one which is heading to the upper side. So we are using just this trend line to mark our take profit. The same trend line which we've been broken and we're using it for sell position is the same one which we now use for take profit. Does that make sense? And for the buy, the one we are seeing here, we just want to see a break above the tip of this high. So we'll buy there. Does that make sense? Does it make sense whatever I'm saying right now? So as much as we are selling this based on this trend line, we'll be taking profits also based on the same trend line to the lower side. So we'll be selling when the price gets below 1.22164, we'll pick that sell position. Our take profit is when the price was touching this trend line. I hope that's a bit clearer now. So I want us just to look at a very good example, just some few examples if you can find any on this chart. Take another chart, sorry, instead of that one. For a chart. Okay. So let's see. Cool. So I'm not saying that it's by default that when you enter sell after the break below the consolidation that the price will likely continue, like the price must continue down. No, the price must not continue down. It's not always a must that when this happens, the price goes down. Sometimes you may enter sell, the price pulls up, and then breaks above. So that means if you sell it there, your stop loss must be above the entire range. The highest high you've seen so far, you have your stop loss above it. Whilst you sell it there, you take profit and your stop loss. Let's look at an example from a different chart because I don't see us getting a good example there. Okay, we have one here. It doesn't look very good, but can be a good example. Look at this. Here. Look at that. We have this here. This is the first support. There's a move up. There's a pullback, a support. There's a move up. There's a pullback, and then there's a support. Then there is this breakout. So we don't see much of struggling here, but you can see that the price actually went down and even hit our take profit. So these are the two places to take profit from. So after the break here, you actually could have taken a sell because the candle you're seeing here is definitely not just a single candle unless a time frame. It could be several candles consolidating, and the entire sum up of all those consolidation is what sums up to green. So this could be a good sell with your first take profit, and then the next take profit is here. So if you took that sell there, your level, and this too is your other level. Doesn't look very good, that one though. So we have another one here. Another one here. Look at how nice this support is. First, we have this. We have a support, we have a support, we have a support. There is this breakout, and then you see massive struggling like this. So this one, immediately after the price has broken below, we're supposed to pick a sell. And as you can see, it actually hit the take profit before giving us the correct place to sell from. This was the take profit, and this is another take profit. So I'm looking at this as the trend line, support, support, support. There is a breakout. You're supposed to sell it with your first take profit here, and the next one is here. Let's get a different example. So the same thing would apply to if you're having a declining supportive trend line, like you have a resistance trend line which is heading downwards. Let me draw that. Assuming you have something like this, you have a trend line, this, then the price keeps coming to it, then bounces off from it to the lower side. It continues down, here comes back and touches it, then continue down, comes back and touches it, and then continue down, then it comes back again, and then it breaks above. So as I said with the previous case, our main concern is when the price touches this level from the third time, which is somewhere here. We'll pick that sell and have our take profit here. And when the price breaks above the same trend line to the upper side, then that will now mean we've broken to the upper side. We want to look for buy positions now. So what will happen is this: we'd like to see price make some consolidation. We want to see serious struggling. I've seen cases where the price fails to struggle and then instead it goes up. That's still okay. If you are on this chart when that was happening, you can still just buy it immediately after the candle which closes above this trend line. You can still just buy it. But the best case is where you actually see struggling. That is, you see price attempt to again get below the same level, but finds it hard. So how do you take profit after you enter a buy here? You'll have your first take profit there. The next one is, and then the third one is the one at the very top. So as I said with the other case, we are also taking profits in this case based on the levels where the price was touching the trend line. So if the price touched there, that's a take profit place. It's a take profit place, and this too is another take profit place. So if you buy it there, your stop loss is here. We are expecting that the price should spike up to the very top. Does this make sense? Whatever I'm saying. Okay, so you will buy it there, have your stop loss, and then your take profit you place just as I've said. So we'll look at just one example for this. We have it here on gold. So look at this. Look at we have a trend line here. Look at this. We had a resistance here. We had a resistance. We had a resistance. There is this candle which opened here and then it closed above. Look at what it did. Actually, it went up to, it touched this. This is our first take profit, and then this the next one. So it actually touched to just the first place. So if you took a buy here, this is your take profit. If the price came back down and you're able to buy it maybe when the price is here, then your take profit is still here. Does that make sense? Okay, so that should bring us to the end of today's webinar. I hope you've understood something really good. I will meet again next week at the same time. So thank you. See you.